So those concerns about tapering, about higher inflation, really offsetting those crushing earnings season from the likes of Target and Walmart as well.
Absolutely. And the market has been acutely attuned recently to comments in those Fed minutes and the words and descriptions that are used. I think today we saw, of course, the first sign of the thinking about tapering. And the market is looking at that saying, all right, something's coming. I still think the Fed's been extremely consistent in their language, saying that interest rates are going to stay at zero until they have confidence in the economy. They've acknowledged that they're not there yet, but they are optimistic about the forward path. I think overall, we're going to continue to see this debate around inflation. You're going to get volatility throughout the summer, and we're going to be guessing about the Fed minutes and the specific meaning of those words for the next several months.
Do you buy into that volatility? Do you buy the dip, given that the U.S. economy at least seems to be very strong at this point?
I think you have to look at opportunity. So certainly with the dip, you are getting stocks that are going down in price and potentially have great value associated with them. I'm encouraged because we came off just such a strong earnings season. Over 85% of the S&P 500 exceeded expectations on earnings. We're seeing a lot of strength in these businesses as they come back online. I think they're really being able to put the contrary pandemic structure behind them and really push that behind, move forward, look forward with a good strategy. And I think that's very encouraging. There's growth in a lot of these businesses. And as always, when investors move out of something such as tech, they oversell it. And you might have opportunity to get into something you really like.
Susan, what is your favorite means of inflation hedging at this point?
I think for stocks, you have to look at different sectors. I go back to healthcare. I think healthcare, because it's been so underappreciated on the future spend in that sector. If you weren't COVID related, you were ignored. I think that's a sector that can come back and really come forward. It's also something that's a little more defensive, and with that potential for appreciation, I look to that as more of an offset against inflation. With that inflation, you have to be very careful. And I think now you pick your spots. Multiple expansion isn't going to happen. It really is about company fundamentals and who can exceed expectations.
Susan, I want to throw up this chart, which kind of goes on the back of what Sherry mentioned about just the euphoria in the markets until this point being carried by expectations of this continued robustness of the US economic recovery. This is Citi's Economic Surprise Index. It's close to June 2020 levels. It's almost negative. Like, nothing happens if it goes negative, right? But does that tell you that the impetus for further upside from economic, upside surprises is starting to wane, that the good news is pretty fully priced in?
Well, we are seeing that a little bit. For example, Home Depot yesterday had really impressive earnings, but people were worried about, can this continue? Is this as good as it gets? And the stock actually was not that impressive in its price action on the move. So we are seeing that. I do think that a lot of expectations have been pulled forward into the pricing. I don't expect a meteoric rise as we saw from March of 20 to now in the market. Obviously, expectations have been pulled forward. There's more confidence that things are going to get back. And as such, investors have anticipated this. I do think, however, that there's continued room for appreciation because interest rates are still incredibly low. And with that, you're looking for alternatives. Equities continue to be, I think, a good alternative for investment. And it is still a place where people will allocate assets.